and then here's what it is in our neck of the woods. And by starting at the top and kind of you have that inverted pyramid, right, where you start with the big 30,000 foot inflation, consumers, interest rates, right? Then you start to drill it down. Well, here's what's happening in California. Well, here's what's happening in Rancho Santa Fe, right? And then just by virtue of having gone through those three levels, you've already, built so much knowledge into that client's head. So
yes. Hey y'all, you're going to love this session with Jordan Levine on explaining the housing market. A couple things before we jump right in. Number one, if you like this type of content, could you please give it a thumbs up? And if you leave a comment or ask a question in the comments down below, I promise that I will respond to each and every one of those questions. And if you haven't already, please subscribe. That really helps out the channel for me. And then one thing I'll do for you guys, you'll see down below at the bottom, you'll see the chapters. And so maybe you can look around at the different chapters to see if there's a question that really serves you best for this content. So hope you guys enjoy this one. This is a great session. Hey everybody, I'm super excited. I have Mr. Jordan Levine, Chief Economist of the California Association of Realtors. And for all my friends across the country, I've been asking a lot of my coaching clients, Jordan, I said, do you have a chief economist with your real estate association, and who are they, and where's their content, where's their monthly report? And it's really sad for all my clients out there in a lot of different states, they don't have a Jordan. And so for us California friends, please make sure that you are getting on the podcast. What's the podcast name? Housing Matters podcast. Make sure you guys go to car.org, click on Industry 360, and then click on the housing market forecast, and you will see Jordan Levine's latest presentation on the housing market. So my friends, the reason why I brought Jordan on today is because his presentation style with the housing market is something that I very much respect. The skill, the preciseness, the simplicity in which he explains things. So this is the perfect person, in my opinion, to help all of us to be able to explain the housing market better to our friends, our family, our community, hopefully your YouTube channels. So I'm super honored to have Jordan on today, and let's pick his brain on some do's and don'ts, languaging and whatnot. So Jordan, why don't we just start with kind of some fun and go and with the question of what would you say is kind of the biggest mistakes you're seeing in when agents go to explain the housing market to either a buyer or a seller? Is there anything that comes to mind?
The news pervades, right? So everybody's trying to be top of mind and they want to come with the latest and greatest of whatever happened with the Fed or some, kind of current event related aspect of the market or the economy. And for me, I always like to take a zoomed out perspective and really kind of keep it very simple. My big mantra is always like the KISS principle. I had an old boss who just hammered that into me. Is like, keep it simple, right? If you can't explain it in a way that your 16-year-old niece is going to understand, right, then it's not, value. It's not about kind of convincing everyone else how smart you are, right? For me, that's less important, right? It's great if you kind of leave a room and everybody goes, wow, that guy is really smart. But if they really haven't been able to kind of glean anything that's going to actually help them, and I think that's also true not just of like economic forecasters, right? It's like you want the client to go away, the home buyer, the seller, what have you, to go, yeah, wow, that gives me some food for thought. There's always trade-offs, and I think that it's easy to get hyper fixated on the Fed or whatever that latest thing is, or there was a new release on foreclosures or what have you, and to really, kind of keep it to the fundamentals and don't over fixate on one specific piece of news. There's trade-offs. There's that happened. There's also this other stuff that happened. And so really it's about adding context and perspective. And, one of the big things, I don't know if I see it all the time, but one of the things that I always worry about is trying to convince a client one way or another, right? Like to me, the job isn't to be there to convince them to do this or to do that. It's to ask the right questions that maybe they're not thinking about, and then to have, be armed with the expertise, with the market data, with the knowledge, to be able to kind of respond then to questions that they're going to have back. And so for me, I think that that's the name of the game. It's just that here's what we know, right? And then you take that and make an informed decision. And to me, that is the kind of critical role, more so than trying to get them to do something one way or another.
Correct. That's exactly right. And that's exactly what I've been trying to tell all my coaching clients is I don't want you to sell anyone on doing something. We're not here to convince them. We're not here to sell them that this interest rate is normal, or this market is normal compared to that market, or I hear a lot of this languaging that's kind of trying to either downplay or there's nothing to see here and don't worry about that. And it's and again, it probably comes from a good place with some people, and then also can come from a bad place with some people, just trying to get people to do the thing at their own benefit, right?
Right.
And that's a big challenge. So all right, well, let's jump into some technical language that I've been really looking at. And I'd love to hear what you say, because you just said something. What I was saying the other day is that there's opportunities and there's challenges in every market cycle.
Yeah.
And I kind of heard you say something in there, but you use different language around that. Tell me what you were saying by that.
Yeah, I just think, that people always ask me as an example, is it a good time to buy, right? Is it really a good time to buy? And I think what they're really asking is much more simplistic than what they're actually asking, right? What they're asking, our price is going to go down, I think, is essentially what that question boils down to. And I think that's just such a narrow focus in the conversation of whether it's the right time to buy. I think and if you've looked at our forecast, we do bake in the likelihood or the chance at least of price volatility, even in residential real estate over the next 12 months. And I think, if we take the surface kind of level of that question. And, then the answer is prices could be volatile, right? And maybe prices will go down a little bit over the next 12 months. To me, though, that doesn't necessarily equate to good or a bad time to buy, right? Like for me, and again, I think this goes back to what we were saying before about, just kind of being there to ask the right questions. When somebody says, is it a good time to buy? I would turn around and ask, what's going on in your life? Did you just get married? Did you have a baby? How's your job going, right? What's your timeline? I think that's a critical one, right? Especially for those of us in California where there's such deep structural challenges and ultimately we just have too many people and not enough homes to put them in, meaning that long-term prices are going to go up, right? And I have every confidence that even if we do see price volatility over the short run, it's going to be temporary. And therefore the question becomes kind of, what's your timeline? If you're trying to buy low and sell high and you're on a very short fuse and you could be moving jobs and doing this and that, then it is a period where there's heightened risk over the next 12 to 24 months. If you're going to buy a house and sit on it for 10 years, then I think it makes sense to get in, sooner than later, right? We're all kicking ourselves for not having got in 10 years ago, and there's been ups and downs in the market and all of that. And so I think, again, it's asking the right questions. It's not as simple as just our prices going up and down. There's also the interest rate side of it, right? We've got a bit of a reprieve. Rates have gone down. That's like actually something I think that goes in favor of buying. You've got a market where there's more homes to choose from. There's more stuff on the market just to even look at. You've got, markets that are not as red hot competitive. You've got sellers that are actually discounting a little bit now, right? And so I think it's much more complicated than just what's happening with prices. It's where are you at in your life? It's what's your plan for this home and what because if they're saying, hey, I'm going to buy this and I'm going to live here until my kids graduate high school in 18 years, and it's like, yeah, that's a phenomenal time. Rates are way below historical norms, and so again, it's about asking the right questions and then coming with the data and saying, oh, if that's the case, then here's some great interest rate data I can show you. Here's some great data on long-term price trends. Here's some data I can show you about population growth in California versus new residential construction. Why I think prices in the future are going to be a lot higher than they are now. And for me, that's the role. And I think that's what the really successful agents are going to be able to look back and say, yeah, there was a huge market shift and, sales in particular have been going down. And they're going to say I had a great couple of years because I was really there helping people to make right decisions. And I think that's not just going to give you a great couple of years. That's the type of stuff that gets them to keep coming back and send their kids to you and all of that, is that you're really that trusted advisor that's kind of put yourself in a position where you win when they win, kind of a thing. Yes. And I think that's kind of where the rubber's going to meet the road, because there is a shift in the market, and I think the strongest are going to be the ones that do best. And I really think it's about bringing that expertise and just, again, giving that perspective and context. That's what you guys do, is you're out there dealing with all this stuff all of the time. And I think that's what they're really coming to you for, not to have you make the decision for them, but just to have you considered this, have you considered that, what about this? And just to really give them that perspective to do what's right for them.
Right. Yeah. You err for a lot of my coaching clients will love everything you said. I tell the example, I went to, Bruce Norris, and I went to one of the big investment clubs, and I was going to sell a house and I was going to buy a more expensive house in 2014. And I ran up to Bruce and I said, Bruce, hey, I think I'm going to buy this bigger house, more expensive house. Do you think I should wait because prices will go down? Or, what do you think? Right. Kind of getting the forecast. Yeah. I was guilty of it.
Yeah.
And he said a series of questions. He says, is this for your family? I said, yes. He says, can you live there for 10 years? I said, yeah. He says, can you afford it? I said, yeah. He said, then who cares? And he turned around and walked away.
100%.
And I had to reflect on that, and I had to think like, okay, this investor kind of mindset, buy at the right time versus what's best for my life, my family, my future, right? This is my home. There's much more to this. The cost of the home is the cost of the home. Right. Really. So so that's that. I hear everything you said was so in line with kind of the slap in the face that he did with me, and I loved it. And of course, I move forward, and then I move forward again. Yeah. And my life is forever changed because of that advice.
100%. And anytime I can line up with Bruce is I'm feeling good about myself. But it's true, because even if you look at like 2006, 7, 8, 9, 10 in San Francisco was the most inflated market, right? It got almost up to $1 million there at the height of the last cycle, and then we started to see foreclosures and things like that. Prices in San Francisco dropped by 50% roughly in terms of a median price. But if you look at where prices in San Francisco are today, they're in excess of $2 million. So even people who bought at the very height of that market, right before it plunged, 40 to 50% are now, 40 to 50% above even where they bought it. So again, it's all about that kind of historical perspective. And again, it comes down to what's your timeline. It's like, if you're in a job where you're moving all the time and you're a developer and you're going to Seattle and going here and there, then it's like, yeah, maybe buying a house right now for only a year or two might be, more risky. But again, like you said, if you're there to put down roots, that's the kind of thing that you can't do in a stock portfolio, as an example, right? You get to live there and all that. So again, I think it just comes down to really, being that kind of trusted advisor, being that consultant in chief to folks, and just having the information and making sure that they're thinking about it the right way.
Yeah, I think what you said earlier is like zooming out and looking at the big picture, not being myopic.
Right.
The last headline that you read, the last headline that your potential client read, right? Zoom out, and that'll be the better. Let's jump over to the seller, because I think the agents are really have a tough time with the seller today, right? Because the expectation in this new market, and please, could you give me some help me with my language on this? Because I'm saying to my clients right now, use these phrases, and maybe you can give me some better phrases. I said, in the previous market,
yeah,
off the peak of the market, and in this new market.
Right.
I don't know if is there a better way, some better language there, or do you think that's pretty reasonable?
No, I think that's pretty reasonable. I would say the market has shifted, and this is where it was white hot before, right? And now it's still pretty competitive actually, but it's just not as crazy competitive as it was. If you're comparing today, even to anything outside of the standards of the last 18 months, it's still what a reporter would always be trying to get me to call a seller's market, right? Is like, tell me this is a seller's market. You still have homes that are closing, but I do think that the market has shifted. I also think the market is rebalancing is another way that I think you can talk about the market without inducing a lot of panic, because I think that's really what you're seeing now is that things are have been so out of whack for such a long time that now they're starting to come back down to earth, or to rebalance, normalize, however you want to describe that. But I do think that that's kind of we're seeing the fundamentals of just basic supply and demand work. This is how economies and Econ 101 they told us was how it was supposed to work, right? You have some like event like a pandemic that makes that creates the surge in housing demand because our homes are now more important to us than ever before. It also kind of killed off the supply side because nobody wanted folks walking through their house and all of that during a pandemic. And so what's supposed to happen in that kind of environment, lots of demand, not a lot of supply, prices go way up, and eventually that kind of lures some sellers back into the marketplace, and then you finally get supply that comes back. You get prices that go up so much that some sellers now find themselves in a harder some buyers can no longer afford and step back. And so ultimately that kind of supply and demand mechanism is working. And so one of the ways that you could talk about is that we're like coming back to an equilibrium too, right? Is that we're after being so kind of imbalanced, that now we're kind of starting to go back towards something that's more sustainable over a longer term.
Yeah, that's good. Yeah, I like that. One of the interesting scenarios that happened this week, Jordan, was a client of mine up in Washington, just south of Seattle. She met with a seller in like kind of April, May. She quoted him 850, and then they decided not to sell. She met with them this week. Here we are, it's August, the first week in August, and the quote was 750.
Right.
And so one of the things that I was like, hey, okay, so how did you explain that? And then what stats did you use? Because, and one of the fundamental things that we know in kind of the coaching world, where we're helping agents making sure that they get the listing over someone else to get the competition. Yeah. We know that, my father is the one that used to say this. He says, you must accept the fact that you will lose listings for two reasons. Number one is you'll get outpriced, meaning that another agent will tell them that they can get them more money. Right. And so we're about to run into that kind of uncomfortable spot where we could lose the listing because we told them really the truth and we did our due diligence, but another agent will tell them something else, maybe not maliciously, maybe just out of actually incompetence. Right.
Like they're not up to speed.
They're just not up to speed. They don't know how to explain the market. So, so any advice to a lot of my listing agents out there who really need to be able to do a better job of explaining kind of where we were to where we are, and then how to set a better expectation about pricing moving forward, right? Especially if they looked at Zillow's estimate or looked at stuff and they're like, oh my gosh, well, my home was worth, or my neighbor sold sold in April and the number was this. Why are you quoting me that? Right. Right. Is any best advice on kind of how to have a better presentation and conversation about this?
Yeah, absolutely. I think, this is where the data really is your friend, and to lean on the data and because I think it's more unequivocal.
Let me just point to your monthly housing market stats are available on thecar.org. And so all my friends out there in the country, you need to put some pressure on your state association to up their game, to provide better stats for you guys. Yeah. Okay? So
have them give us a call. We've done all the programming; they can leverage it. But that's really where, and actually on our website too, even more so than the monthly data, is we have a weekly tracking that we put out every week. It's on our it's like a big 60-something page chart book. But that is, I think the more real time, and like it's incredible now when I put out our monthly report, it feels like such old news, because for the last 4 weeks I've been watching us kind of build towards that crescendo at the end of the month, and I've seen it come a long ways away. And actually, all the data that consumers see, that we see, that gets published by the federal government, all of that stuff is in the rear view mirror, right? And so that's exactly where you fall victim. Whereas if you do have that kind of more real time look, like I can tell you in California, we, just last week, I think the percentage of homes last week, this is through, we're recording this on a Friday, but this is through last Sunday, was, the percent that closed above list price was like 37% of the transactions last week. 6 months ago, that was 75% of the transactions, right? And so when it comes to the listing presentation, I think being able to bust out those numbers and say, yeah, you might get somebody to come in here that's going to tell you that they're basing that, they're not up to speed, right? They're basing that on this chart when it was, 3 months ago. This is what the monthly data says way back in April and May and June. We're now, halfway through August, and here's what's actually happening in the marketplace, and you'll be able to really kind of say, look, somebody might list it for a higher price, but what you can see is not just that fewer buyers are willing to pay over asking price, but you can see that more sellers are employing that strategy, and it's kind of not working out for them, right? Because we have homes that are now sitting on the market longer, and I can show you that through last weekend. We've got more sellers out there who did come in and shoot the moon on price, and now 43% of the sellers out there that were active last week actually just did a price reduction, right? And so we can do it that way, right? And we can sit on longer, and we can ultimately end up conceding some money in escrow and all of that stuff, or we can right price it, which is what I'm advising, and we'll sell it still quickly and all of that stuff. And it's just more about, and that's where I say, again, you can kind of be agnostic, right? You're like, I'm not telling you what's the best. You're like, we'll do whatever's best for you. If you really want to push for 850, and we'll just draw a line in the sand, and knowing that it might take us 3 times as long and that we might end up coming down in the end anyway. Let's do that then, right? Or if you want to try and right price it, then we can do that. But more, you're not telling them what to do, right? You're just saying, this is the reality that's happening out there. This is what I see happening with other sellers, and this is what happens with agents that tell you to go in too high, is that you don't end up actually achieving that because the demand has changed, right? The transactions are going down, buyers aren't paying that. And so again, I think that's where and you can kind of again be agnostic. You're like, this isn't my opinion, I don't care what we do, I'm here to help you out, right? But I'm just telling you what the data says.
Yes.
And I think that's a comfortable position to be in.
Yes, it is.
And actually, that's the best service you could do, right? Is because that's what's really happening.
Yeah. And the conversation with my client when we talked about this was, I was like, well, what is the stat that actually reflects the new market? Yeah. And for her, it was, I think we just pulled up InfoSparks, right? Kind of one of the, and they had that up there in Washington. And we looked at the list to sold price ratio. Yep. And coming off of April, it was like 112, but where it was this last month was like 100. And I'm like, there's your 12%. 12% off 850 is 100,000. Let the stat do the work for you. Right. Yep. And but what I heard from you and what I've been telling my clients this week is they need to have a better relationship with the stats. Yeah. Right. Gone are the days where you should just, do a stat report where you just kind of spew a few stats just to do it. Right. Like build a relationship. And, I think we have the great advantage in California having you to help us build that relationship. But, everybody, we need to really, become more fluid in our presentation style.
Yeah. And if you look at the reporting that I put out lately, it's very simplistic, right? Like we put up market reports, like we have a housing market overview that just has like 6 numbers on it, right? It's like, here's how many homes sold. Is that going up or down? Here's the inventory. Is that going up or down? And then a couple of those measures of competitiveness, the days on market, the percent selling above list, how many sellers are reducing. And then, instead of kind of putting up a bunch of charts and a bunch of it's really about being able to tell the story of what those numbers actually show, right? Like that the days on market, that's just a number. It's 23. Okay. That's bigger than it was before. Homes are sitting on, it used to be 7 days. It used to be able to sell your home in a week. Now, it takes you 3 weeks, sometimes more, to go pending, right? And for me, it's all about kind of very simple conceptual statistics, right? Days on market, right? But really, and then what is that actually telling us, and being able to tell the story of what that number means. And I think you don't have to do all kinds of crazy data work and spreadsheets. I mean, it's you grab a couple of those key numbers and really dig in on what that tells us. And I think that's where, is the value is, frankly.
Yeah. I've been having a conversation and I heard it in your presentation and it helped me. I was listening for the right language because I've been talking to my clients about understanding leading versus lagging indicators, right? And I started to get fancy and be smart and cool, leading and lagging indicators. Yeah. And then, but I think you use some really good language, and I think you said something like forward looking or looking back. You use some language there that I thought was really effective. And then could you address kind of leading versus lagging and how might we do a better job of explaining that?
Yeah, definitely. I think, sales is the classic one, right? That's the one that we put out even every month, and people go, yeah, closed sales, right, went up or down, or there's more transactions or less. And that's the kind of classic, stereotypical, backward looking kind of rear view mirror.
Backward looking. Yes. Yes. Thank you.
Yes. It's all in the rear view mirror, right? Like for that to have finally shown up as a closed transaction on the MLS for me to download it and to put it in that statistic, it was, pending, right? It was in escrow for 28 to 45 days. We know that that's still roughly the time frame. We know that that person was already probably shopping for that home for months in advance, right? So when I talk about a July closed sale, that's telling me about what the consumer was doing back in March and April, right? From the buy side. And so I think that's a classic backward-looking indicator. The forward-looking stuff is stuff that tells us what we think is going to happen in the future, like a mortgage application, right? That's at the very front end of that process, or theoretically, at least not super deep into the process. Hopefully people aren't going pending and stuff without having talked to a mortgage banker, but that kind of a thing, a pending sale, right? Somebody now has negotiated with a seller and gotten a deal down on paper that in principle will result in, at least theoretically, in a closed transaction 30 to 45 days from now. I always look at the kind of nerdier, esoteric macroeconomic stuff, right? Like, are people having more jobs now and things like that? Are people making more money? Those are good things for the housing market. And so that's the kind of stuff that I look for.
And you do a really good job with kind of talking about the macro market. And so I'm glad you said that, because I loosely said to a bunch of my coaching clients probably 2 months back, I was saying, hey guys, the stuff that they're seeing in the headlines, inflation, interest rate hikes, stock market, cryptocurrency kind of falling apart, and now the debate around the recession. And I was like, that stuff's kind of a leading indicator of kind of what's coming down the pipe a little bit. Could you maybe help us with understanding macro and then translating into the micro, and kind of what should we be responsible for in that game?
Yeah. And unfortunately, we do have to at least be kind of, put on the kind of econ nerd hat at least a little bit. And I always kind of force this on, California realtors at every outreach that I do, is I always kind of start with the macro, just because, and you don't have to be an econ nerd. You don't got to go read a bunch of textbooks. You don't got to learn how to do spreadsheet work or anything like that. But you at least have to have some base familiarity with just the very kind of fundamental economic concepts like jobs and GDP, because these, at the end of the day, are what drive the housing market. And the good news is it's not super complicated, right? When people talk about GDP, they can draw all these fancy charts and do all that stuff, but it really just means how much money's out there in the economy. And if GDP is growing, there's more money. There's more money that's being made by businesses. There's more money that's being made by workers. Assets are appreciating, right? All of that good stuff. And so I do like to focus on those just to the extent that they ultimately are responsible for what we see happening on the ground in housing. When we talk about excess demand for housing, right? And again, this is kind of in some ways good justification for my student loan that I've been paying forever, but is that, there is just, it's just still basic supply and demand. And what do we mean by supply and demand? How many homes are out there for sale? How many people are out there that want to buy homes? And if you think about that, that all comes down to the economy, right? The economy is growing. People are getting more money. Incomes are rising. My assets and stocks and real estate that I own are appreciating. Then I'm going to be out there buying more stuff, right? I'm going to buy more cars. I'm going to buy more clothes. I'm going to go on more trips. When those things are going the opposite way, then we can infer the opposite, right? And so I think at least to the extent that you can kind of connect the dots on,
Yes.
more people working is going to mean that, housing will continue to see buyer demand, right? And I think that's like important in times like now when there's lots of scary forward-looking indicators, consumer confidence and inflation and all that stuff. But if you look at kind of just the very nuts and bolts, right? Like we're still adding jobs. I think we added like over 500,000 jobs last month alone. So businesses are still hiring, right? They're still having to pay workers money. And that's ultimately, I think, good for housing too. And at least part of the conversation when we talk about the very stuff that is happening, right? Is that there is some basic kind of underlying positive trends out there that are persisting as well.
And I asked I did a video on recently kind of like on a 4-step framework, and I'd love to get your opinion on this. I said, hey agents, when if you do something on the housing market report, kind of touch this macro, right? Kind of these big topics, and then move into your local stats, right? Like kind of is these things influencing your local market, and then have a better read on that and make sure we're doing that more regularly so that they can get more confident with that conversation. Then the second thing the third thing I said is kind of set cliffhangers, right? That we don't need to have an exact answer of we don't need to have the crystal ball, and let people know that, we need to keep an eye on this stat, and I look forward to looking at it next month. So we're not making any prognostications. We're just saying, hey, let's keep an eye on this trend to the next month, and we'll talk about it then, right?
Yeah.
And so I kind of just set like a nice little framework that I thought, okay, I think this would be helpful, right?
Totally.
But the other thing too, and I think you touched on this, but everybody talks about that real estate is very local. And this is where I think real estate agents can play such a vital role in kind of to manage the narrative of the national news in relationship to their local market, right? And we've got 100%. National news, we got California, and then I've got San Diego, and then I've got coastal Solana Beach, which is, so it's like all of those they all play together. But if I'm just talking to my friends, family, and community, I want to at least let them know that I have an understanding of these. But at our market, it's here's where we're at, here's what I'm looking at, here's some trends that I think are interesting, and then I'm keeping an eye on these on a regular basis. And so feel free to let's keep give me your email address.
Keep that conversation going. Yeah,
I'll add you to my email, or at the next barbecue, let's talk about it more, right? Where it keeps us good synergy with everybody in communication with all their marketplace.
Absolutely. And like for me, it's just all about kind of contextualizing once again. And I learned very kind of early on in my career as like a data analyst, right? Was that I would always go up and give a number, and I realized so quickly that it was like the number was like so meaningless without the context. And so it's all about how do you build context, right? You might have heard the whatever this is, right? Well, what is that compared to what it was before? What is that compared to what it is in other areas? That's where I think for me, that's why we're so hyper focused on localizing the data as much as humanly possible, right? Because when I started working at CAR, we did a lot of county level reporting, and that was it. And you go to a place like Solana Beach, or you go to like Rancho Santa Fe, which is very high end homes, and you go, here's what's happening in San Diego County, of which a large chunk is like Lakeside, out where I lived and grew up, in high school and stuff. And it's like so irrelevant to somebody in Rancho Santa Fe. And so you can really, that's why I always start with that macro stuff too. Is it's like, here's what's going on in the broader economy, and then here's how we're either kind of embodying those bigger macro trends, and this is all kind of something that we're all experiencing together, or here's how we're bucking that trend, right? Oh, but we're Rancho Santa Fe, our median price point $6 million. Yes. And you can see on these stats, right, that the top end of the market's still kicking butt, right? And that's why we could probably expect to continue to overperform, et cetera, et cetera. But then, you're not making any projections. You're just saying, here's what's happening in this, in the broader kind of spectrum of parts of the United States. And then here's what it looks like, in our neck of the woods, and why we might expect things to look, like X, Y, or Z in the future then as a result. Yeah. And you never like kind of stick, you're never really planting your flag too firmly and overcommitting one way or another to a 6.5% increase in the, or whatever it is. But you're just saying, these are the markets that appear to be more resilient, right? We're in one of those markets that seems to be, that's why maybe we'll do a little bit better, whatever that story ends up being. But I think until you look at that data and you go, here's big picture, right? Which includes everything from 10 million all the way down to like $150,000 homes in Ohio. And then here's what it is in our neck of the woods. And by starting at the top and kind of you have that inverted pyramid, right? Where you start with the big 30,000 foot inflation, consumers, interest rates, right? Then you start to drill down. Well, here's what's happening in California. Well, here's what's happening in Rancho Santa Fe, right? And then just by virtue of having gone through those three levels, you've already, built so much knowledge into that client's head. So
yes. Beautiful. We'll wrap up right there because I loved it. And I know you've got a Zoom at 2 p.m. So thank you, Jordan, for all of your time, all of your wisdom for us in California. And then for all my friends out there who are meeting you for the first time, and hopefully some of my California people getting to now meet you for the first time. So then you get there and get onto the car.org website.
Yep.
I know you're pretty active on LinkedIn as well. So guys, find Jordan Levine on LinkedIn.
Yep.
Is there anywhere else that I should be sending these guys to follow you?
No, I think that's it. We got lots of good data. Ultimately, I'm just here to help, folks kind of be more successful at getting people into homes and things like that. I'm passionate about the job. I love working for members and realtors. So, I work for you. You can just always email too, and we'll go from there. But yeah, awesome. I so appreciated the opportunity, dude.
Yeah, you can tell. And I know that you're probably speaking at there's a car event that's coming up in Long Beach. Yeah. I know my brother Tom they're promoting him as the headliner, which is cool. Yep. Obviously I didn't get the invite, but I know Jordan and maybe your buddy Oscar and the podcast. So make sure
we'll all be there in Long Beach that first week, I think, of October. So yeah, come by and say hi.
Okay, awesome. Thanks guys. Have an awesome one.